Greetings, everybody. This is Jeff Scott. You can see it's 8 a.m. It's actually Monday morning. I don't do this usually on Monday, but yesterday I had American cancel my flight. Then I waited 7 hours in Salt Lake to connect on in Sacramento, and my connection plane broke. Finally got home this morning. Had an interesting weekend. I like to tour around and spend time at seminars from gurus. And Roy Kelly is an old-timer, although he's not that much older than me. And he is based around some floor trader pivots, similar to what John Person uses. But he actually has some very cool ideas. He approaches the market similar to how I approach it from how he trades, position size, and money management. So I like spending time, and I learned a lot and appreciate the weekend he gave. Unfortunately, it was in Sacramento, and if you've ever been there, you know why I say unfortunately. I should have gone to the one in Vegas. That's all I can say. I entitled today, Earnings. This is when it starts. And no matter what I think the market's going to do, I think on an individual stock, it's going to be earnings. As always, for education purposes only. I'm a doctor, not a broker. I'm independent, and trading involves risk. You alone are solely responsible. My goal today is to do this in about a half hour, so I'm going to skip through some of the introductory material, such as who my gurus are that I learned. Actually, my family is the biggest one that tells me I talk too much, so we'll skip talking about this. Anybody who's been here before knows about it. And if you haven't been here before, look at one of my prior videos. Here's some of the things that I use. And really, I spend most of my time with the various indicator sets I use for TradeStation and Thinkorswim. HighGrowthStock.com, I will mention this. This is the website for HGSI. Cheapest program on the planet, $5.99, including data. Gives a free 30-day trial without a credit card. And under investing strategies, you'll see hundreds of movies, many by myself and Ron Brown. I have no connection with the website or the product except friends with the vendor. You know, where are we in the stock pattern here? Boy, this market has run incredibly. We had this great buy signal on the 26th. The question is, when do we stop? Do we roll over this week? Do we wait until May, or do we keep plowing through to the year's end? At some point, we've got to be up here and wondering where it's going to go. Now, I listen to a lot of people. I read a lot of things. And there's a guy from CCM Capital in Atlanta, and he makes a strong argument that there's been some signals shown over the last couple of weeks that suggests this market may have a lot more to go. That would be great, wouldn't it? If we look at how Friday ended, unfortunately I have a lot of healthcare stocks, or I did when the day started. I got stopped out on some, and you could see the market was very strong throughout. Everything is green. Healthcare was probably the weakest sector. If we look at the major markets, and nothing's changed, so we can just point out that we continue in strong uptrends. We are starting to approach highs, but we're not there yet. Even the Russell 2000 on the lower left-hand corner is broken above its 200-day moving average. The VIX continues to fall, and I just say the dollar's in chop because to me it's been directionless for months. If I look at a monthly perspective, you just see how far we've come off the December 26 lows. I mean, what a great opportunity. Big reversal, green candle low, touching the 200 on the E-minis. Here's a NASDAQ futures, the Dow futures, the Russell futures, the VIX, the dollar. And notice how the dollar is just vacillating around its moving averages. They still are above the moving averages, so it's still bullish. But to me, it's sideways with an upward slant. Now, what happened underneath the averages this week? We could see that, but maybe you can't see it on the 10-year and the 30-year bond. They actually picked up a little bit. Rates are still low. I kind of have this happy zone. When I'm in this happy zone, the market usually performs well. When I drop below, it sounds like concerns about the economy. And when I go above, then we worry about the interest rates are getting too high. We're back in the happy zone. And, perhaps the rates are going to start to slowly drift higher. The Fed's taken a more neutral stance, and perhaps that may abate some of the flattening of the curve concerns. The AD lines remain at new highs, both on the 2,000 and the 1,000 small and big stocks. And if I look at the NYSE, we're at all-time highs on the AD indicator. Now, remember this when we get to the McClellan, because I had to scratch my head a little bit. Notice all the major ETFs, they're listed over here in color coordinated, have moved up with the market. The only one that's turned down, no surprises, interest rates have picked up, has been the TLT, the bonds. Now, the breadth actually gave up a little bit this week, and you can't see it very well, but there's just a little bit of a flat week. Now that's important because if I look at the T2121, which is the 3-month new high, new low, last week I said we were at an area of reversal or at least sideways move, and you can't see it well here because I got so much on this chart, but that green arrow is where it dropped to. So we came off extremes, but we're still a market that's having a lot more new highs than new lows. Now this might be concerning because the daily McClellan keeps getting higher, and both the oscillator and the summation index are lagging. So there is a divergence there, and that might be one shaky leg holding up this market, but we'll wait and see. The buckets, outstanding, 78% above the S&P 1500 are above the midline of their Bollinger Bands. That's bullish. You could see we have clearly what I would call rightward shift, that most of the stocks are trading near the higher band. In fact, most of them are between 80 and 90% of their Bollinger Bands. You have very few above the Bollinger Bands, but we are clearly at a level again where either we run right up these upper bands, which can happen in a bull market. If we start to get too far above, that probably says a short-term pullback is indicated. I wouldn't expect to see a Hindenburg until we get new highs, and you could see there's no Hindenburg omen firing in the first column. We have plenty of new highs. We don't have enough new lows. That's a good thing. Market tone. We had this very prolonged period of time from that December 26th reversal until early March where the market was just steadily up. We went through some choppiness. Now, after Friday, all the major indexes are in the green. What does the green mean? Ian Woodward years ago created the Woody indicator, percent B times B, with specific parameters, and we are now in the bullish zone. You apply the same rules to sectors, and you notice things are a little different where most important, the utilities weakened a little bit as the market's strong. That's not a big surprise, but healthcare caught a cold. In fact, as I said, I got damaged a little bit in some of my stocks on Friday because I do have some healthcare, and as I said, I've got less because when I get damaged, I usually get stopped out. And it is what it is. That's why they call it trading, not winning. Still up well over 50% on the year. The canaries, the former market leaders, well, I won't say they've turned around. They're still consolidating, pulling back. Maybe a retest here would be good. The fact that my 50, the 17's crossed the 200, and the 50 is moving towards the 200 is nice, but there's no Momo there. My recent leaders that I picked at the beginning of March before the market softened look to me like they're ready to start at the right side of the cup. So maybe that will be supportive of the market doing better. Please note that what has led in the past does not necessarily lead in the future, and I use this as more of an early warning signal of a market rolling over, taught by Ian, again, years ago. When I look at this week, what really comes out and hits me? Well, I look for the red dots. This is from Econoday. I'm sorry about that. And you could see industrial production on Tuesday, trade and petroleum on Wednesday, jobless claims on Thursday, retail sales on Thursday, housing starts on Friday. Okay, a lot of Fed auction activity on Thursday. You've got a bunch of Fed heads speaking in the beige book. Medium on news, not medium on earnings. Look at the earnings. Citi and Goldman have already reported today positive. Afria was a negative. M&T was a positive. We got Bank of America, J&J tomorrow, United Health, they got hammered last week. Netflix, United Airlines. On Wednesday, you got United Rentals, you got Las Vegas Sands. On Thursday, you got Schlumberger, American Express, and others. And Friday, you got nothing. As I said, this is my quote. If anybody else has said it, God bless them. I didn't read it anywhere else. It's a judgment call to hold stocks over earnings. It's bad judgment to not know when your stock's earnings date is scheduled. So as we jump into the rest of the presentation, market continues the assault on new highs. Rates rise as Fed seems to be stressing a neutral stance, and markets seem to like it. Energy stocks have lagged oil prices and appear might be ready to join. Earnings this week. News still may be a driver as a redacted Mueller report will head to Congress, leading to the question is whether the Attorney General Barr's assessment will be the same as the liberal Dems. Oh yeah, don't forget the calendar May looms, although the sell and May trade did not work last year. All right, so again, I don't want to be here all day. I've got the market opening in an hour, so I'm going to go through and give you sort of my assessment of where we are in the market beyond what I've already showed you, and I'll use some of my tools to get there. So I do like to look in TradeStation. I'm going to use my John Person indicators and some elder indicators and just get a sense of the health of the market. We'll use the futures. This is the NASDAQ futures. And you could see big uptrend since beginning of the year. You could see a person buy signal on daily. And if I do this, let me see if I can get it to work. On weekly, it's just hiding down there. And on monthly, you notice the paint bars are, I think that's a blue, green, and green. A red paint bar says the market's weakening and I should be shorting or holding. I shouldn't be initiating new longs. Green, the market's strong. I should be long or holding. I should not be initiating new shorts. And blue is neutral. So from a person buy signal, we're strong on 3. From a colors, we're okay. We're within the envelope. There's no extension. That's good. These red dots show MACD divergence. They typically mean the market's slowing its ascent and you're at risk of a pullback. But as I've learned, these things may go on for a while. In fact, these are weekly MACD divergences. So strong markets within the envelope. Buy signals are, high jump is at 93%. So we're also getting towards that point where a sideways or reversal happens. But we're not there yet, and you wait till it happens, the weekly bond goes green. So I'd say the NASDAQ looks strong, despite the fact the futures are off a little bit to start the day. The E-minis, not much to say, looks almost exactly the same. And of course, if I do this, I'll show you the buy signal down there as well. They also got the dots, that's at 96%. I don't ignore these because the high jump tells me that it's the most extended it's been in the last here 200 bars using objective criteria. The Russell 2000, which had been the weaker of the bunch, does not have the MACD divergence, still looks pretty good. It's at 83%. And the Dow futures are turned positive on Friday, has its MACD divergence. It's green everywhere, and it's at 89%. So the markets look strong. The other things that matter to me are things like the dollar. And the dollar is in a sell signal, at least on the short term. Longer term, it's still in a buy. And we know the VIX is quite low. Let me see if I can get this to work today. Dollar VIX.X. So VIX futures are up a little bit today. Notice the green dots here, followed by spikes. These are MACD convergence or positive divergence. So I feel pretty good about the markets, although I do think we're getting, no shocker, to a point where a reversal is likely. But will we take out the prior highs on the E-minis and NASDAQ futures? As you see, we're not that far. We'll see it better in HGSI. Speaking of HGSI, let's go ahead and open it. I may have to resize windows because I just did a update. I changed the resolution for this program. I like to go down to look at the major industry groups. Warehouse view. Now, for those who haven't been here the last couple of weeks, I've been in the process with George of developing my own indicator set and on add-ons to fit that. They're not finished yet. Someday I'll actually have enough time to sit down. But I've tried to incorporate what I call the JAS indicator that will be renamed when I release it. And it's really looking at trending, and it's trying to look at how, if I see an industry group where 90% of the stocks are in uptrend versus one that 10%, or if I see that there's been 10 new uptrends in the last day versus 0 downtrends, would that be meaningful to me? And I think it is, and I've incorporated that. And so when you see the JAS indicator, it's just basically picking up a trend using some various crossovers and price relationships. So let's look at the major markets plus, and for that I use a top-down view, which is price and volume. And you could see with raw combo that mid-caps, NYSE, NASDAQ, Russell 2000. So a growth stock picker's dream. When you see that, I got hurt a little bit with biotech down here on the bottom, had a rough week. Gold, silver, volatility, pulling the market down with the dollar. So let's just take a real quick look. And I'm just going to use the daily charts when I do my own analysis. I use the daily and the weekly together. And again, I have to do some resizing here. So excuse me for a second. And let's go in. Shut that down. All right. So this is the S&P 500. And let me go to my new view on indexes. And so what do we see on the S&P 500? This is the chandelier stop, which should be part of your package now. This green bar here is my trend reversal. Red is a trend reversal to the downside. So what do I see here? I see a deep pullback in the S&P 500, which has resolved nicely to the upside. With a marked improvement in breadth, still bullish. I mean, where would my target be? I mean, I always have a target in my mind, but frankly, I never marry my targets because I have to do what the market does, not what I think it will do. But if I had to put a target in, it's probably up there. And I think there's going to be potential for, if we get that far, for a double top. Now, reality is, if we get that far, let's just look at what we're looking at there. Don't look at the days, it doesn't matter. It's only 1% away or 29 points. So we're not far from, can't believe it's that little, but that's what it looks like. Not that far from all-time highs. And again, think about the picture I just showed you. I showed you concerns of some weakening breadth. I showed you with the McClellan. I showed you high jump indicators. I showed you MACD divergences. You know, everything's starting to line up that we may have a run on those new highs, and then all bets are off. Plus, we get into May. If you look at the Dow Jones Industrial Average, you know, let's look here. Here's got to be your target. Let me open up my drawing view. Go to my red because that's a negative target. Hold the shift key down so I get a straight line. Stop, let go of my mouse. Now let's change that to yellow. And let's just, I didn't let go of things. Hold on. Let's try that again. So when you hold the shift key down, you get a straight line. If you take your hand off the shift key before you do off your mouse, then it moves with your mouse. So how far are we away on this? Up here, we're 2% away from old highs on the Dow. So again, we're very close to where this market is probably going to face some resistance. What about the NASDAQ? I don't want to be a broken record, so I mean, it's the same wherever I look, except for perhaps the Russell may have a little bit further to go. And again, let's find that high, hit the shift key, pull over my mouse, take my finger off the mouse, now off the shift key, switch the color, and let's just go from close to that level. And we are 2% away on the NASDAQ. So do I think the market can go higher? Sure, it can go higher. Is it definitely going to fall after it hits this area? I don't know that. Neither do you. But is it an area that I have to at least be aware of and be concerned of? Absolutely. So I'll leave it at that and say markets are going to move to new highs, and then we're going to see what happens. But I think there's a confluence of signs that say, you know, there's a lot of reasons to expect either a pause or somewhat of a pullback. And as you can see, as I mentioned, the Russell just breaking above the 200 is nowhere close. The dollar in HGSI, just because I use, you know, different indicator sets, let's just look at it, is above its stop. It did have a sell signal come in, and if anything, it's really going sideways with an upwards trend. If the dollar, let's see, the volatility is down in an area of complacence. It's not as low as it was in 2015 and 16, but it's getting there. The VIX rather, not the dollar. If the dollar is not doing much, what's gold? Well, gold is pulled back because the dollar is above its moving averages. But if the dollar pulls back, then gold and silver should benefit. But gold dollar is at least above its averages, and it's must be considered stronger because the metals have sold off. Now, in contrast to that, let's just look at U.S. oil. And I want to think about this when I go and look at some of the oil stocks. Now, I don't know this because I'm not Lou Powers, the old, sorry, Lou, old meaning when we had HGSI live meetings, he was sort of the guru when it came to energy. So I'm looking at about a 45% up off the December lows. So we had a big move in oil. Nothing says anything has changed there, except when you have that big of a move, you start to wonder about when do you get tired and slow down. But we've had a big oil move. But if I look at, for example, XOP, oil producers, they're flat. Now you had a move on Friday. If I look at oil, OIH, upwards sloping but flat. I look at XLE. This is probably the strongest of the bunch. Now, if most of the oil companies resemble this, and oil looks like this, whoops, either they predicted their earnings going forward based upon a higher oil rate than they were seeing, or the higher oil prices might suggest that we may have some upsized estimate revisions and some positive developments in the oil patch. Now, if I look at industry groups, here, I'm showing 176 groups. If I look at two-day force, I've got 65 positive. By adding the JAS trend, I'm looking for groups that actually have more buys than sells. So let's just very quickly, I need to do one thing here. I want to kill this thing here. Hit delete. All right, perfect. Oil, semis, banks, telecommunication, internet, infrastructure, telecom, REITs, application. See what happens. How different is it here? Entertainment content makes it in. Other than that, in casinos. So it's a little different when I do that. I like using my new searching tool, so I'm going to go that way. So let's look at exploration and production. This was the highest on my list. Now, I ask you, if oil prices have gone up, stock prices have not followed on the explorers, and this comes to the top, is there something potentially happening? We talked about this last week as well. Yeah, something happened. Anadarko Petroleum was taken out by Chevron, or I think Chevron. Apologize for having a mental stumble and not remember which one. It could be the other, but I don't think so. So here's how I'm looking at things now. Awesome. Let me do a little bit of adjustment here. Let's see if I do this here. You can actually have any warehouse views listed on your chart. So I want to just increase my space on the right-hand side of the chart so I don't cut off things. I'm just going to push this up to 40. So it will give me, we'll push it up a little bit more. Again, when I change the resolution, everything changes. Okay. So here's a big gap up on Anadarko Petroleum. It's now an arbitrage play. I wouldn't play it. This is an important window to me. It tells me within this index of energy, of exploration, 69% of the stocks are uptrending, 30% are downtrending. And on Friday, there were 19 new uptrends and 3 downtrends. That's a very strong group. So let's see if there's anything here that looks interesting. Here is Pioneer Natural Resources. Apparently, these guys are also a Permian Basin play, and like Anadarko, and they're up now on speculation that one of the other big players may need to come in. And apparently, there was another player in the APC deal, and they offered more money but required a shareholder vote to accept it. So Pioneer Natural Resources, this is not by any means a cheap stock, but it does have earnings. It's got some earnings growth coming, perhaps turning around here. Does not pay much of a dividend. Broke above the 200. That's interesting to me. But, you know, if somebody else gets bought, not them, they'll pull right back, potentially. EOG Resources, not quite above the 200, but moving up. Concho, not so much. I like Devon, and when I look at Devon, what I want to do with Devon is I'm going to probably play it. It's got earnings per share. It's got earnings per share growth. It pays a small dividend. But the way I'm going to play Devon is I'm concerned that this 200-day moving average could turn out to be resistance. It certainly was support for a while up here before it broke. So I probably would put my buy stop above the 200-day moving average. And even better, I'd like to see it break above and retest. That would get me more excited. But Devon, you'll see, is on my buy watch list, as is Parsley, big base. New buy signal came in, starting to move up out of a squeeze. Noble, like Devon, this one's sitting right on the 200. Diamondback looks a lot more like Parsley, still basing. Hess, perhaps the best of the bunch in that it's not gapped up so much away from you. It had a pocket pivot kahuna. It had a buy signal come in here as it broke above the 8-day exponential. Everything is green. I am playing a couple of different oil patch stocks. One of the hard things is knowing what's Permian Basin and others. But I think energy looks like it's stirring in that rising oil price, but not the stock prices may catch up. Semiconductors have been strong. Marvell has been one of the strongest. It was up 11% last week. If we look down here, 80% of these stocks have, instead of saying uptrend, I'm just going to say buy, 9 new buys, 3 new sells on Friday. Here's a stock. Look at the volume that's come in, a bunch of pocket pivots. It hasn't had a down day for a while. It's had a big run. It's hard for me to chase it here. It has no earnings per share growth, although it does make money. I'd rather wait and pick it off closer to the 50. This is when you want to buy these things. Here's a retest here and a gravestone doji. That would have been a great time to jump in. Broadcom, similar, needs a rest. Again, you want to buy them off the 50, which is the blue. Qualcomm, below the 200, pass. Texas Instruments, again, you want to buy them off the 50. And notice how my indicator gave us a buy signal the day after as it moved up above the 50. NXP, this one is potentially viable. This is one that went through potential acquisition a year ago, year and a half ago. They had some China issues. Maybe that happens again. Above its moving averages, pocket pivot on Friday. Intel's been a big mover. Don't like the earnings per share growth. Xilinx, this was one that really opened our eyes to the semiconductors, a big move off of the 50. I'd rather buy it closer to the 50, but it does have earnings per share growth. And Analog Devices, another one that's had a big run. So these are getting extended. I look for pullbacks to buy them. The banks. So PNC reported on Friday, and most of its week's gain came on Friday. And, banks have not been a great place to be for a long time. This is a beautiful chart, in my opinion. You've got some earnings per share growth, not much, but it trades at a low multiple. It pays a dividend. You've broken above the 200-day moving average. You got a kahuna, pocket pivots, and the day before earnings, I had a buy signal come in. Banks, the majority of sells are buys, and more importantly, a lot of new buys came in on Friday. So PNC, you'll see, is on my buy watch list. I'd buy it here with a stop not much below the 200. This is a Mexican bank that gapped against me. I'm viable gap up. U.S. Bancorp, so much. Fifth Third, except for the fact that it's been in a downtrend even of late. This is interesting as well. It broke above its 200 pocket pivots. This is one where I'd like to see a little bit more momentum come in, but start to look interesting. Key Corp a little further down, Comerica further down. I'd rather buy them and they're breaking above 200. Here's BBT. I think this, I don't know if it came out with earnings today. Right at its 200, that's one to look at as well. You could always buy the KRE, which is a basket of these small stocks. And lo and behold, it looks a lot like the others. It's still below the 200. It pays a small dividend. But I might look to play with this one, especially if it can break above the 200-day moving average. The big banks. So JP Morgan, earnings are out. Last week, you could see it had a big move. Gapping up above its 200. Pocket pivots and kahunas. 65% are in buy, 7 buys this on Friday versus 4 sells, 2.7% dividend. Not much in the way of earnings per share growth, but a break above the 200 gets my interest. This is one that you could probably buy. I have a lot of this one, which is Bank of America. It'd be interesting to see what happens because it's now broken through the resistance since the beginning of the year. Its earnings are not out yet, but it had a MOBO breakout, pocket pivoted kahuna yesterday, and then my buy signal 2 days earlier. Earnings are out tomorrow. Citigroup, I think earnings came out today. Looks a lot like the others. I don't play this one as much, but that looks interesting. And I did like this chart too, Banco Santander, although I didn't like the fact that it closed at the bottom of its range on its Bible gap up. Clearly, Deutsche Bank, no thanks, clearly there is something going on in both large and small banks. Communication equipment, who would think that Cisco would have a chart like this? This is an old, stodgy stock, and it's in a 45-degree tight uptrend. One of the leading stocks in the market right now, pays a 2.4% dividend. It's not my cup of tea. It's too far gone. You can see the high jump is right up above the top. And in fact, if I looked at this in TradeStation, just out of curiosity, let's go here. And spoiler alert, I do like Cisco, but I like the other one. This one's at the top of the channel on the weekly. It's at 97% on the high jump. When a stock is more extended, it's been 97% of the time over the last 2 years. I don't usually run after it. It can certainly go higher, but I think this one's a little bit too extended for me. CommScope, breaking out, long decline, broke above the 200. Don't really like the earnings per share growth. Sienna, I've owned this off and on, had a deep sell-off here. And my buy signal fired on Friday, mobile breakup from a squeeze, pocket pivot and kahuna. Interesting. I may look to nibble on this one. I'd rather buy it above these moving averages. Look at the group strength there. Acacia, I have this one. Look at the earnings per share growth. This is clearly a turnaround play. Hence, you get these small earnings with big earnings growth rates. Yes, it has a big PE and doesn't pay a dividend, but I like it when the growth rate is surpassing the PE. And this stock has had a very nice run. But like Cisco, is it getting overdone? ACIA, which one's more extended? Simple. No, the MACD divergences have worn off. Also up at the upper envelope here, and it's at 75%. I'd rather own Acacia right now than Cisco. Here's another big player, Arista Networks. All right, so there's clearly strength in communication equipment. Internet media, Facebook, from the dead. Now, 50-50 here. 58% buys, 42% sells, although there were more new buys than sells on Friday. I have about a third of my Facebook remaining. I chickened out and sold out the rest here at similar levels when it broke down below the 200-day moving average. There's a lot of crap going on in the industry, a lot of talk about policing and security. So there's risk there. I'll keep my position because I believe in it long term. But as I said, I've sold off most of it. Google, cup, handle, is this a breakout? It's hard to chase this stock, in my opinion, based upon the earnings per share growth and the fact it's a $1,200 stock. And I'm not sure I want to be long this going into earnings, but it's an interesting chart pattern. I liked it better back here or back here when I had a buy signal, an earlier buy signal. Yandex, the Russian search provider, internet play. Look at all the kahunas down here. This is interesting to me. Now it broke out. The time to buy was my buy indicator here. Kahunas, my buy signifying a trend reversal, PSAR reversal the following day out of a squeeze. Is it gone too far? I think so. I probably wouldn't chase it. IQ, every time I buy this thing, it comes down. I'm not talking about it. Tennyson, it's an IPO. It's pulled back to the 50. It's got a buy signal. I guess I could kind of argue, not that I need to argue, that did you have a run up, then a flag, and then now you're going to get a breakout? Maybe. It's on my watch list. YY, this one continues to do little, but it hasn't destroyed the investment hypothesis, which is it broke up above its moving average as it continues to retest. So I do this every night. I go down through the top stocks, infrastructure software, think antivirus, think Microsoft. So here's Microsoft. Microsoft's at its highs, slowing earnings per share growth, pays a dividend to extent that for me. Fortinet looks interesting. Cup, handle, breakout. Buy signal came in off the 50. And all these buy signals do, whether they're kahunas, pocket pivots, my new buy signal, just to get you to look at the chart. It doesn't say to go and buy it. 3/4 of the stocks are in buy signals in this group. Fortinet looks interesting right here. I could buy it here, be happy with it. Ditto with Checkpoint. OKTA, another one. So there's a lot to like still in the application technology stocks. Telecom carriers. I've been pushing AT&T for weeks. I still have a position. I still think it's a good thing to buy. You buy it when it's cheap and you enjoy the dividend. Intelsat's too low in the pattern. T-Mobile with Sprint as an arbitrage play. Zio Group doesn't pay a dividend. Here's my fan. Looks the same chart as Zio Group. Why would you buy that one when you can buy this one, get a 6.3% dividend? The pullback here was a dividend dispersal, so you have to wait 3 months to get your dividend. But AT&T, let's put on a weekly chart. You buy it when it's down. You sell it when it's up. You don't know when down is done going down, but it looks to me like you've put in a saucer bottom. I think AT&T remains extremely viable right here, but you're not buying it because it's a great growth stock. You're buying it for a dividend. Cyrus One Cone is a stock that we've talked about and I've owned in the past. This is one of the data center plays and breaking above the 200-day moving average. I like that. Pocket pivot at a kahuna. My big buy signal came back here. Nice little uptrend since. That's what I'm looking for. Pays a dividend. Don't know how to understand its fundamentals. It's a good place to be. There might be better. Prologis, they own a lot of big office parks. Breaking out to new highs, pays a 2.6% dividend. American Tower, this may be a good play because of 5G. American Tower owns a lot of the cell towers. Look at the earnings per share growth. Again, I don't know how to interpret them. Is that before or after dividend? Pays a 1.7% dividend. Equity residential. Public storage has come back. REITs look good in this environment, and they've got some some of these have some nice dividend plays. So this is what top-down review is. I start and I work down the top 10 or so. Application software. Some of these got hammered, and now they're starting to recover, maybe all of them, perhaps. Smart sheet, run up, pull back to the 50 and a buy signal. Volume coming in, mobile breakout and a viable gap up. What's not to like, except it doesn't make any money? I think it's an IPO. Electronic Arts, no thank you. Cerner, stodgy old healthcare technology company. Viable gap up here, it's gone sideways. Probably too old school for me. C Limited, this is one that I had played earlier. Again, when would you have wanted to buy it? You'd wanted to have gotten in, well, here was my buy signal to get in. Here was an earlier buy signal. This is when I first saw it with a mobile breakup from a squeeze and my buy signal, a eureka in the market, saying the market's going higher in a kahuna. Like when the other things, I've got a little bit of a flag, pull back to the 50. I think this looks interesting here as well. PTC breaking out. Autodesk looks surprisingly interesting too. Sort of a cup and a handle and another handle, and looks like it's breaking out. So there's a lot that I like this week. We've gone through many of them right now. I said I wanted to be short. I've already got along longer than I thought. Let me show you the stocks that are interesting to me going into this week. Now, I also want to tell you, I look at long and I look at shorts. And there was no trouble finding stocks to make my potential short list. And all my potential short list is, if this market rolls over, there's our stocks out there that I might look at shorting. Now, right now, they're all pretty much all showing green. But let's look at some of them. Look at Netflix. Netflix, big run up to trendline resistance. Shooting star here a couple of weeks ago at that, and rolling over, and support might be all the way back here around 260. On the daily, it's broke through support on Friday. So Netflix looks weak. Now, Netflix could be saved by its earnings, and you'll notice it's been in a prolonged daily squeeze here as well. Look at United Healthcare. What a dog. Excuse me, I shouldn't say that. I'm calling them. Broke through a triangle here. Broke below support here. Now, the reason why I wouldn't run out and short this is these green dots tell me there's some MACD divergence to the upside, and maybe it's done falling for now. But what a lousy day. Look at Insight. Another failure at resistance, and sell signals. There were a lot of stocks that look like this, and these are the stocks I like to short. But I don't short unless the market turns down, because whenever I start thinking about shorting earlier on, it's a mistake. Now, some of the stocks here that I liked, and this one sort of surprised me with Illumina because I think it's going to face competition, but Illumina broke through resistance here in a strong uptrend, so Illumina looked interesting. But let's go back and look at my buy list. And how do I get the buy list? The buy list is a result of my top-down review, and it's followed by looking at those charts, and then I had approximately 800 other charts that came from various lists that I use. So let's look at, I'm going to show you a couple of things, and then I'm going to be done. All right, this should bring them all up here. 60 stocks. What did I like? You could see a number of banks looked interesting. Application software. We didn't talk casinos, but I liked El Dorado and Wynn. A lot of explorers. There's that Devon. I mentioned that one. I like Parsley and Pioneer as well. A number of REITs, some semiconductor devices, and a smattering of other stocks. So let's show you what I can do with my new lists, my new add-on. How many of these have a buy within 1 day? These are all stocks that had a new buy signal come in within the last day. So First Bancorp might be one that's ready to run, FBP. So here's a stock, ran up, sideways, new buy signal came in, great earnings per share growth, pays a teeny dividend. I put this on my buy watch list. We already looked at Devon. I hate to say that I'm not going to buy a specialty apparel stock right now, but I have to look at this and go look at Abercrombie & Fitch, cup, handle, and is it breaking out here? You have my buy signal come in. I'd like to see it get above its chandelier stop there. A pocket pivot, 2 kahunas in the last 3 days. That one looks kind of interesting. Parsley, I showed you before, is kind of going sideways, had a new buy signal come in. The problem with any trending indicator in CHOP is they keep firing, and that's a big negative. All right, what about 3? JS buy within 1 day, but also in a weekly buy. So that might didn't eliminate anything here. 5, stocks with a new buy and the chandelier recently flipped to buy. All right, let's look at Popular. So, a couple things that should happen here. And I have to work with Matt because sometimes it doesn't seem that it happens. Because a shift, I don't see a shift on the chandelier here. But I do see a new buy, a kahuna, a pocket pivot, and a mobile breakout. And I see a stock that, in the right group, I might be interested in that. The other one in this list was Cudian. This is a bottom fish play. This is how I found Tandem last year. I'd wait till it broke above the 200. In this consumer finance group, look at the earnings per share growth coming in. 12 new buys on Friday, 0 sells. This is clearly a hot group as well. 7 new high close doji weeklies. I'm long Alibaba already, and I feel good about it. And it fell off. It corrected about 40%. Deep correction. Had a little bit of a, I don't know, is this a cup and a handle and a breakout, or I'm just looking for them today. Everything's a cup, handle, and breakout. This is one where the industry group's not supportive, but this could be indicative of some Chinese strength. Great earnings per share growth coming in. I mentioned the other Cisco. Here's the other Cisco. Here's a stock that just broke above the 200, coming out of a mobile breakout and a squeeze, and it's been in a Jeffrey new buy signal now for several days and several points. So I apply these studies to the market as a whole. Here's a new HCD weekly and had a new buy signal within the last 2 days. That Cudian comes up again. Now, if I'm looking at the entire market, this would be the stocks with a new buy signal, no ETFs. It's kind of hard for me to look at all those stocks. So I try and filter them with other things, but it gives me a fishing license of where to go. Now, in EdgeRater, you can get a list of Mark Minervini stocks, and these would be stocks that are at a documented uptrend, above the moving averages. So maybe I just want to look in this group. And there's some stocks here that we haven't talked about. All right. If I look at 3 here, this might be even more interesting to me. Stocks, again, with a buy signal within 1 day, they're in a weekly buy. So these should be pullbacks at an uptrend. Look at MasterCard as an example. Clear uptrend and a pullback right below the PSAR dot could be setting up for another run. So on that note, let me just go back to my buy watch list, and I'll leave you there. Again, thank you for being here. And now I got 30 minutes to go look at the market and decide what I'm going to do today. Just because something's on a buy watch list, just to be clear, I don't go out and buy everything because I put it on a list. What I do is I enter that into a radar screen. This is a radar screen. And then I look for new signals, which will be flashing signals to come in person. I look for Bible gap ups. And I look for things that might be interesting. None of this means anything until the market actually opens. Out of curiosity, let's see what's moving so far. This is the reason why you buy you get TradeStation. So that Public Storage must have had bad earnings. ECL. These are the big losers, pre-market. Big winners, bookings, Aviomed, Regeneron, United Healthcare is bouncing. No surprise, it had those little dots. Intuitive Surgery, there's Illumina, we talked about that. Not how it opens, it's how it closes. And as I said, my short list can be more of a warning of the market. And when I start to find shorts, it usually tells me the market's getting ready to reward those, but not yet. All right, everybody. The last couple down here. You all have a great day, great trading week, and look forward to next week. Thanks, everybody. Goodbye.